Everyone is coming from. Hi, everyone, again. So we know that you're joining us from all over the world today. We have from all over US and North America, as well as European participants. Thanks so much for joining. We will be today talking about startups, about investing, and about our angel investor program, and hopefully address all of the questions that you have come with. We hope to make today's session as interactive as possible and engage you and also give you exactly what you're here for. So before we get started, I want you to help me understand who you are and what's your interest. So could you please put in the chat if you're a startup, an investor, or if you're neither one of them, put other or specify it. So let's see who do we have in the room today while we're waiting for everyone else to join. So we have a startup. There we go. Oh, we have quite a few startups. So excited to have you here. Startups. Oh my God. Do we have investors too? Founder, thank you. Very nice. We give it a minute or two also. To have the best idea of who is in the room and address everything really precise for you. Startups. Okay, this is a very interesting room. So as you might know, the Startup Investor Accelerator program, we are an angel investor training and also a startup investor program. So this will be a very relevant session for you. And we have really great speakers for you today to cover a lot of things, both from the investor point of view and also from a participant or program organizer point of view. Okay, we are 5 minutes in, and I am getting quite a clear idea of who do we have in the room. So to get started, I would like to share with you who am I and present myself to start with. I'm Astrid Zacharian. I'm based in Barcelona, and I'm the regional responsible in Europe for Startup Investor Accelerator, which, as I already mentioned, on one side is an investor training program, on the other side is a startup investment program. We are focused on helping new business angels get started, and we are helping new startups hopefully improve and get investment from our growing angel investor pools. Okay, I see the chat going on there. And I think for today's session, what we are going to do is address everything in two sides. On one side, we'll address the thing from investor point of view and what does the program offer to new business angels. And on the other side, we will be talking about what the program offers to startups and how startups can engage with the investors. I will move on and I'll start with sharing with you a few slides about our program and what it does. John, could you help me by bringing up the slides for me? Just to give you an idea, today we have our program founder, the lead investor of our upcoming program, and one of our most active angel investors who is also based in Switzerland and starting the program there, but I'll get there soon. John, can we start from the first page? Or should I get started myself?
No, that's good. So let me make myself a little bit more visible here.
Okay.
So hi, everyone. My name is John Seacrest. I am the founder of the Seattle Angel Conference, and now that has grown into be the Startup Investor Accelerator. This started with a program in Oregon, in Portland, which is called the Angel Oregon Program, which then grew at one point to 6 angel conferences in the state of Oregon. And then I ran the Willamette Angel Conference in 2006, 2007 timeframe. When I moved to Seattle, I saw the same problem in the ecosystem. And so started the Seattle Angel Conference in 2012. So we're currently in the middle of the Seattle Angel Conference number 25. We have a meeting tonight for that. And the focus of this was how do we in a small community get more innovation in our community? And it seems like there's lots of entrepreneurs doing interesting things, but how do we get them out of the garage and going? So the thought was if we put money on the table, that we'd be able to get the entrepreneurs out of the garage and see them, engage with them. And then how do we get money on the table? Well, how do we get more angel investors in our community that are interacting with them? And as an economic development entity, we ended up focusing on this question of building stronger startups and more angel investors in a community to make that go. And the Willamette Angel Conference ran for 10 years, and now we're in year 13 of the Seattle Angel Conference, and we've had plenty of companies that have come and gone, including one that has gone on to be public on the stock exchange. And so we have everything in between, being a big company on the stock exchange to falling on your face right after we gave them money. So we can talk about all of those journeys of those startups. And the goal is to make the startup ecosystems be more compelling, to have energy and flow in the ecosystem where we get positive feedback as investors invest in companies, succeed, get more money, invest again, and we drive more and more innovation in our local economy as a result of angel investing. Where'd you like to go from here?
That's very good, John. If you can switch the slide, then we can continue from there.
You want me to, so we did the 2012 Seattle. We also have helped Kelowna in British Columbia get things going. Bend in Oregon is the Bend Venture Conference. We have the San Diego Angel Conference, which is a copy of ours. We've been chatting with several groups in Africa, but no program as of yet. And we put together this Mossy Ventures umbrella to hold all the different pieces that we're working on. So when investors do their work, they have the opportunity to build a flow for themselves. But there's a life cycle for an investor. There's a point where they don't have enough money to invest, and then there's a point at which investing their money won't exit until they're dead. And it's probably time to stop angel investing, or they've gone through their budget and they don't have the resources to spend it anymore. So we tend to ask people to define what the limited amount of money they're willing to bet on this strange ecosystem thing called an angel investment. For me, I have chosen about 10% of my net worth. And so that's a fixed amount of money, which turns into a fixed number of investments. And so in an ecosystem, we need to be producing more angel investors to continue that process of growing the ecosystem and funding things as they go forward. And if an angel investment only is taking money, then it's probably the wrong investment. Both that investor is the wrong person for the company, and this is the wrong company for this investor. So we want angel investors to contribute more than money in the ecosystem. And the way that you do that is that you build a diverse set of angel investors in the community. We've been doing that with Startup Investor Accelerator for a while. We're on round 5 now. And we've got different groups of people in many different cities in Europe. We have a couple of alumni in Taiwan who are wanting us to look towards Southeast Asia as opposed to looking towards Europe. And so we're doing some building that direction as well. So we've run this, more than 30 times now. We're more than 50 investments in. We've seen almost 2,000 companies go through. Out of the Seattle Angel Conference alone, we've invested more than $5 million, $5,000 at a time among the investors. And so when we look at that, angel investing gives us a foundation for early companies to get traction that allows them to get to the point where they are creating new jobs and making things happen in the local ecosystem. So I'm thinking about angel investing from a local point of view, building my local community being more effective. Helps us get technology out of the university. It helps us attract people that are interesting people to be in our community. It helps us build a broad set of skills in our community. And the process of doing innovation creates a multiplier effect where we grow new businesses that are related to the process, and our little dollar that goes in produces many times that in terms of impact in the ecosystem. We do have this churn of investors. People come in excited, then they leave after having spent the money that they're going to spend. So we have to replace that at some level. And when we build all of these connections between what people know and what people are doing, and the people that know each other and the money that's moving, we can build a startup ecosystem that really has a compelling momentum. So the thing that makes us different than some of the other programs that are out there, and there are several other angel programs out there that are inviting you to come along on the angel investment journey, is that we're focused on growing new lead angel investors. It's not difficult to go to AngelList and create an angel syndicate and gather a bunch of passive investors around the journey. But that produces a bunch of people that give money but don't provide any value. And so our goal is to create value among the angel investors, where that value produces relationships with the investors, helps the companies move forward, helps them find other customers, helps them find other investors and make things going. And so that kind of engagement by the investor makes a difference in the ecosystem. More importantly, the questions that the angels ask of the startups help the startups get clarity on what they're doing. A lot of the thinking by startups is ungrounded thinking. I have this idea, it's all funny, fuzzy, it looks a little bit cool in the sunlight, but when you ask to put it down to ground and build the foundation underneath, there's no foundation because it was just an idea and we haven't built the foundation yet. And so having angels that ask hard questions can be really valuable for startups to actually get clarity on what they need to do and how they need to do it. And we've seen that happen over and over again. For example, it is not at many angel groups, once you've applied to the angel group, whatever answer they gave you is the answer and they don't want you back. Either yes, here's the money, or no, there's no money and you're done. At the Seattle Angel Conference and at the Startup Investor Accelerator, people can come in more than once because the angel group is changing significantly each round. And so we have had companies come in with a bad idea, come in the next time with a better idea, but no team, come in the next time with better idea, team, and no revenue or no traction, come in the fourth time, have the team, have the relationships, have the contracts, and everything starting to flow, and they win, right? And that's happened more than once. And so that clarity of building the foundation of the business really can be valuable for startups. In the transatlantic program, our first one was an investment in a Romanian vegan sushi company. The second one was an investment in S-Lab, which was a investment into mycelium-based packaging, so green packaging. Evitado is a German-based company, which is now moving into the US market, that is doing sort of LiDAR. It's sort of I don't have a good example. It basically helps airplanes not hit the baggage carts, because hitting baggage carts is a very expensive engine rebuild. And so it's an insurance policy by keeping people out of that business. And then Tilden is a non-alcoholic drink company out of Colorado. In addition to those four winners, there are sidecars that have happened because people were excited about the companies that didn't win. And so other mechanisms have been put in place to create a side investment into some of the other ones as well.
Thank you so much, John. That's it for this part. I would like you to help lower your screen and let's introduce our today's other speakers that have joined us. First, we have Sofia Cristina. Hi, Sophia. Well, Sophia is appointed to be our upcoming program's lead investor. And let's understand Sophia's background before angel investing and also her upcoming role in TAG 5.
Hello, everyone. My name is Sofia Cristina Vishan, and I am currently the TAG lead investor for the program that is going to start next week on March 14th. My background is engineering. So I graduated, I have a Master of Science in mobile and satellite communications from Politehnica in Romania, but also I graduated a school in France, in CIMAG, in signal processing. And I have been working for 15 years in cybersecurity in various roles within Orange and Microsoft. And currently, I'm the executive director for the French-American Chamber of Commerce here in Seattle, Pacific Northwest. So I am very passionate to support startups from their early pre-seed stage and helping them grow. I've been so far invested in 2 startups, Evitado and Tilden. I'm helping also Evitado with their business development strategy, especially here in the US. And I'm really passionate to help startups to scale here on the other side of the Atlantic. So help European startups scale here in the US. Thank you, everybody. And I'm happy to learn more about all the other startups that are here.
So nice, Sophia. Thank you so much. And you can, okay, here we have Cyril. Cyril is based in Zurich. They moved there from United States.
Thanks, Astrid. Thanks for the intro. My name is Cyril Glockner. I have been in technology for pretty much 25 years in large companies like Microsoft, Intel, and others, but also in startups and very small companies. In the Bay Area as well as in Seattle. I recently, as Astrid mentioned, moved to Switzerland. I think roughly 3 years ago. Now I'm located here in Zurich. And in summer this year, actually, John and I were discussing, and we agreed that it could make sense to start SIA, so the Startup Investor Accelerator program here locally in Switzerland. And I'm working on that right now. That's my current main job. I've also been an investor in the Seattle Angel Conference a few years back when I met John the first time. I think that is 7 years ago, and have done several rounds of SAC. And now I've done 1 round of the transatlantic program. So the last TAC investment round where we invested in Tilden, as mentioned, I was a part of that. And I will continue to be a part of the investment program while I'm setting up the program here in Switzerland. So please connect with me. We have a meetup, we have a bunch of stuff. We are almost 500 people here in Zurich, so it's great. Thanks, Astrid.
Yeah, thank you. It's very exciting community there in Zurich that Cyril is bringing together. We're highly encouraged. And John, let's add everyone together into the spotlight and let's have a little bit of conversation about startup investing and about the experience that our 2 other speakers have had today. So John has started the program, as we all learned, but also has been an investor in every single round. So he has been personally investing in all the program, all the rounds, all the cohorts. Though not expressing his opinion, which is quite exceptional. But then we have 2 others here that have, Cyril has done the program now with us 4 times, quite a few times already. And I want to first, let's address the program from investor point of view. And if you are a startup waiting in the, like, when are you going to talk about the startup things? We are getting there, so wait for us patiently. So Cyril, how was your experience and what did the program maybe give you in terms of angel investing?
Yeah, it was great. I really enjoyed it. I have to start with saying, though, that when I joined the program, I had no idea what I was getting into. Like, a friend of mine was doing it, and he's like, "Oh, this is awesome. You should come." And so I'm like, "Okay," I come along. I went to one of the first meetings, and it became really clear fast, kind of how little I knew about angel investing and how little I had kind of figured out for myself what I would invest into. Like, well, here are opportunities. Okay, how do I even think about it? Like, what kind of startups am I interested in? What kind of verticals am I interested in? What kind of shape does the startup have to be in? Do they need to have a product? Do they need to have revenue? How big should they be? Like, how long should they be in the market? I had no idea. Basically, it was all over the place at the beginning. And now, like throughout the programs, it became kind of much more clear, because then you develop your own thesis and you're like, okay, I'm interested in this. I don't care about that. So I'm not investing into these. So you have this, you develop your own investment thesis, and that takes time. You can't, I think it's the real kind of, I think, trick for me was that in SAC, that was in Seattle at that time, because it's a learning by doing program, right? We all do it together, all the investors, we are working on the program. You have to do that. You have to do the work. Like, we are putting the work in, and the result is that you become much better in your kind of, how do you think about the startup space? So I think that was my biggest takeaway. I have a bunch of others, but I don't want to take all the time. We can get back to them later.
Thank you so much. And Sophia has been now 3 times. This will be the 3rd time. And I wonder, Sophia, if you would have anything to add to this.
Yeah, I think I was very happy to join the program, starting from scratch, like not knowing much about angel investing, other than what I've seen in movies or heard from some of my friends who have done this, but maybe on the other side of the ocean in Europe, where things are a little bit more flexible and anybody can basically invest in a startup, right? In the US, it's a little bit different. So I was happy that in a short time, over 2.5 months, I was able to learn about what's a thesis, what's a due diligence report, what it takes to be successful in assessing if a startup is investable. And yeah, I think it's been a great opportunity to reach out to a community of other angel investors and feel like we're taking less of a risk, let's say, because the decision is coming jointly as a group versus going into the unknown and just kind of playing the lottery. So I think that's been very reassuring, especially when you start from nothing, like basically just diving into the unknown and kind of feeling that you've got support from people who know a little bit more about, what due diligence means and investing. And the other thing that I appreciated is, the exposure to a diverse universe of startups, regardless of the industry. Our group, it's not focused only on tech or only on biotech, as some of the angel investment groups are. We can, as John mentioned, we can go from non-alcoholic drinks to ground collision detection for airplanes. And so I think this has been very enriching, coming from a very specialized area of cybersecurity, to kind of gain visibility on things that have nothing to do with, my day-to-day job, before kind of getting more into a broader spectrum of activities. And so yeah, I think it's been a great opportunity to grow and to see kind of what the real world is outside of what people who've been working in corporate are used to, right? And kind of get exposed to real problems that can be solved not in 20 years, not in 30 years, but a lot of the startups that we've worked with, like they really have something very tangible, or have a plan to get things tangible. We discussed about the exit strategies, and even if startup investments are supposed to be like long-term investments, sometimes when we've been coming from a corporate world where things are very strategic in the long run, I think this is very fulfilling that we get to see something happening much faster. It's a much more agile environment. So it's been very refreshing for me to actually be immersed in this universe.
Very nice. Thank you so much, Sophia. And especially the fact that you come from corporate, but also have entrepreneurial experience. And now you are on can I call Chamber of Commerce government level?
It's not government at all. It's very
Yeah,
much private, but
yeah.
yes,
It's
I'm
very
looking to
diverse
support.
experiences that you're really mixing up and bringing to the startup scene. But I want to focus the attention back to you. So there are angel investors. That means people who invest their private money into the startups for their own wish, which can have different origins. But a lot of the deals, if you're startups here and you're going to fundraise, you might have heard about the term lead investor. So a lot of the deals the startups need to, like rounds that they need to close, there is a need for having a lead investor. That is basically someone that takes responsibility to help the startup to close the deal, to close the round. So a lead investor is someone that is very unique in the ecosystem and very, very needed. Every round that a startup raises generally needs a lead investor. And Sofia Cristina is going to be the lead investor of our upcoming program, which also means that she's planning, hopefully, to be lead investor in the startup investor ecosystem and help startups forward, not just with her financial and knowledge and connection support as a normal angel investor, but taking it one step forward as a lead investor. But Sophia, I want to address then your role within the program, upcoming program as a lead investor. How does it feel and what are you expecting that you are going to go through in the next 3 months and more?
Thank you, Ashley. So as a lead investor, I think it's important to stress the fact that I'm not here just to gather investors and startups. I'm not here just before raising the money or even to conclude on that part, right? A lead investor is also supposed to be responsible after the fund is raised to inform the angel investors about how that money is used by the startup, and basically making sure that nobody's, using the money to buy Ferraris and just, close the door and close the office after that, right? We want to make sure that the company is on a path to be profitable so that the angel investors are successful. And so I think as a lead investor, it's as important to follow up after the investment is done as it is to do the fundraising. And I think for many angel investors, reassuring that the lead investor will be focused on that also after the investment is done can be a decision factor. I think between a lead investor that says, oh, I'm here to raise as much money and I want, and then, I'll probably send an email once a year, and the lead investor who's actually, well, I'm going to raise enough money, but then I will send you updates maybe once a month or even maybe faster, depending on how the company is growing. I think what an angel investor wants, especially when they're starting, is to make sure that there's transparency and then there's communication and there's continuous updates on the fact that we're supporting the startups to grow and the angel investors to be successful. Those two are equally important. And so this is kind of the commitment that I make if we're onboarding into TAC 5 altogether, is that I'll follow the example of some of our very successful lead investors in the Transatlantic Angel Conference, like Federico Pirola is kind of one of my role models, who's been very successful in keeping us posted with how Evitado investments are doing. And so I'm feeling inspired by some other people in the community that are doing a great job at keeping their group of angel investors informed. And I think that's what I want to communicate to our group here, who are probably hesitating whether they want to join us or not. In between today and May and June, if you decide to onboard with us as an investor or as a startup, you'll have to see me every Thursday morning. So you got to put up with me and I'll have a lot of questions. Don't worry. I'll make sure that, we keep communication flowing all the time. Thank you.
That's amazing. Thank you so much, Sophia. And you've made a perfect connection. I was thinking, should we address it or not? But since you opened the topic up, I want to then bring up the fact that we have Transatlantic 5th program already starting up in March 14. I do want us to address it a little bit. What does it mean? Who is it for? How can someone engage both as an investor and as a startup? So let's do this all together. So I'll start by telling what the program is and what to expect, and then let's fill in the gaps together. So the Transatlantic Angel Investor program, it's a 3-month learning by doing experience for new business angels, where we gather between 20, maybe up to 40 angel investors who are all in a learning phase, and about 60 startups. The goal is for the investors to experience and go from A to Z of angel investing and experience all the steps that are involved in angel investing. That means we start from like very basics of checking startup applications to listening to 1-minute pitches and learning what questions to ask, all the way to making decisions, making selections, learning to do due diligence, craft deal terms, and all the way to making an actual investment at the end of the program. So it's a hands-on learning by doing experience that John and his team originally have created for business angels. It is mainly, let's address together who is it for and who can join the program. John, who can join the program and who is it for?
Well, so our main goal is to get more new investors, and to be invested in the United States, you have to be accredited, and being accredited in the United States and Canada mirrors this as well. You have to be either a millionaire with your net worth, not counting your house, or you need to have 200K in income or 300K with your spouse in the last couple of years and continuing into the future. That represents about 15% of the US households. So there's 9 million people that fit that category in 2023, according to the data set. When we start getting into Europe, then each one of the different countries has its own set of rules about who can do what with whom, some of which are very restrictive, Israel being an example of restrictive, and some of which, like, it's your money, do what
Like
you want,
Spain
don't care.
doesn't
Yeah.
have any guidelines or any
Right.
restrictions to who can start angel investing.
But the fundamental idea is you shouldn't invest in angel investing with money that you need. You should invest in money that you won't miss. And if you feel like you're going to miss it, then you shouldn't be investing it, because there is so much that is unknown about the startup journey along the way. And so given that as sort of a metric, then you have some money that you would like to invest in something that is not correlated with the stock market. The stock markets and bonds have bound together, and they're more related than we want. Real estate is sort of tied to it, and so you want something that's completely unrelated to that. And angel investing is one of the asset classes that's completely unrelated to the stock market. In fact, almost anti-correlated, right? The best startups tend to be created when we're in the middle of a recession, where the price of labor is low, where the bones of other businesses are available for pennies on the dollar, and you can then build something faster and better because everybody doesn't have options to switch to that really nice job over there at Amazon that makes an easy salary that's more than you need. So in general, the question is dependent on each person, and where they live and how they get where they're going. I saw something in the chat. Parents work in the military.
Let me move the
That's a different question. Okay. Yeah.
to Cyril then. As someone, as a veteran, not a veteran, but veteran of our programs, how would you say someone can make most out of the angel investor program? Maybe you can address just from investor point of view, and then we'll address everything for startups also.
Yeah. One of the things, let me just do a quick follow on what John said, because I think that is incredibly important. A lot of angel investors that I know in my kind of group of friends, mostly in the US, but also here in Europe, they started angel investing with like, oh, I have some money that I don't need, as John said, and now let's say it's 10% of my net worth, something that I have reserved. And then they're spending all of it at once. Right? Maybe they write 2 checks. They write 1 check and another check to another startup, maybe even 3. So they write like 3 checks to 3 different startups. And then all the startups go bust. then they turn around and say, well, angel investing is not for me. That is just like a total money loss. Like, why do you do that? Why does it even make sense? And I think we should spend a little bit of time in talking about kind of the portfolio approach, where ideally you take what you have put aside or what you earmarked, saying, I'm willing, I'm not missing that part of my funds. And you're splitting that up in really small chunks. And then you're distributing that across many, many startups. So this idea of like spending more per startup is, while it sounds intriguing, is the wrong approach, because that increases your risk and you're not distributing the risk across many startup investments. And that's why I like the program from that perspective. It starts building your portfolio, right? We are investing $5,000 each as an investor. So you have, while that sounds relatively limited, but if you do that 20 times or 30 times or 40 times potentially, then you are getting in kind of larger amounts and larger investments altogether. But your risk distribution is very, very different than just like writing like larger checks, whether it's like 40 or 50,000. So that's one of the reasons why I really, really like the program. Another point that kind of, I think we talked about a little bit, is that the alumni, I love the startup experience talking with the startups, but I also really like being connected to like-minded investors. They're all very interesting people. Mostly, I mean, I have to say though, in Seattle, we did the program in person. So you're spending a lot of time together as investors to making decisions, investment decisions. That also means you get to know each other, right? You're building community, you get potentially a bunch of new friends, and these stay with you. I mean, I'm still like, whenever I'm back in Seattle, I'm meeting some people that I met throughout the Seattle Angel Conference. Some of them have continued to invest, others have started their own VCs. So there are other investment opportunities. So people grow with the program, and then they go off and do bigger things, and you stay connected with them. So that's an incredible kind of community that has been built. I have one last point, and then I'll pause for a second.
Okay.
What I personally found also, and I was at the time at Microsoft, so I want to kind of connect a little bit my corporate experience here, is it makes you actually a much more, you become a different person when you start doing angel investment. And what I mean with that is that you start to ask different questions in your normal job. Like in the moment where you go through these loops of doing angel investment, and you're like pushing in all the startups and trying to understand like, where are they on the journey, what is working, what doesn't work, where are the problems, that mindset stays with you, right? When you then turn around to go to your corporate job, you find yourself asking the same questions to your colleagues. When they're pitching, you're like, I don't buy that idea. And then you're poking in the questions that you just had a conversation maybe in the angel conference. So you're learning things that are applicable for your corporate or startup life. That is not a disconnect, right? Because you as a person, you grow within these programs, and you can take that and apply that elsewhere. That was really interesting to me.
Thank you, Cyril. That was very, very interesting and addition to the conversation. Thanks for bringing that up. And maybe just to sum up here, I want to, since we are talking about the transatlantic program, maybe since Sophia also knows this, how long is the program, Sophia, and how much time does it actually take for someone to join a program like this, and how much time should they dedicate into angel investing?
It will start on March 14th, next Thursday, and it will last until end of May 31st. And it will take, so we normally have gatherings every week on Thursdays from 9 to 12 Pacific time. So that's evening time in Europe as well. Because again, like we have to address both time zones, US and Europe. And now, some people may say, oh, but I have some travels, you know, here and there. So some of the sessions, I think when we have pitches or demos with the startups, those are going to be recorded, right? So we're trying to address also and give a little bit of flexibility for those who cannot be online like 100%. And there might be times where you would need to be more involved, especially in the final weeks where we're doing the due diligence process. And that's where every team, every V team that is associated with one of the finalists, among the 5 or 6 finalists, would need to spend additional time to talk to the customers of the startup, to the other founders or partners. And so that would be on top of the 3 hours that we have scheduled every week. And I would say this program requires your mental commitment, basically, like be in the mindset of learning. When I started last year, I attended the calls, obviously, and connected. But in addition to that, I have also dived into what resources I could leverage, what reading. And so and maybe there are like YouTube videos or like all of the educational resources also that John, I think, has already started sharing in the chat window here. So, you know, if it's bedtime, your bedtime story, or if it's, you know, your new series that you want to watch on Masterclass or whatever, it takes not just, you know, the time that we have on the calls, but a little bit of more like availability mentally to immerse yourself into what investing is, right? So that is up to everybody and up to how much availability you can put into this, because I understand this is, you know, for some a hobby, maybe for some is like some could be a start for maybe a new career. Like it all becomes part of their personal choice on how much time you want to put. You could do as much as you want, basically.
Yeah, totally agree. And you nailed it, Sophia, on that, really. And the more people put time, the more they get out of the program, or in general, the better due diligence they do, so the better their investments are. I want to address that in terms of the program, since we are here to talk about that. The program itself takes about 40 hours in session and about 20 to 40 hours extra outside of session time throughout the whole 3 months. And I know you're all here also to ask some questions. So I want to maybe direct our attention to now you all that are here. First, we'll take investor-related questions, and then I promise we are getting into the startup side, since I know many of you are startups, actually. So from an investor point of view, do you have any questions about the program? And let's get into that. I'll be removing Spotlight to see everybody. Is that okay?
Have people raise their hand if they have a question, and we'll spotlight them and bring them up.
Okay, right. Perfect. So please raise your hand then if you have a question, and let's see who has questions.
Use the little reactions button to hit the raise your hand if you have a question. And I can be the elementary school teacher and randomly call on people if we don't have questions.
Okay, well, we do have someone that is, for example, mentioned that they are a first-time angel investor here. I think that was David. David, what questions come to your mind hearing this and thinking about starting angel investing potentially first time?
Well, so I'm participating in SAC 25, and I participated from the entrepreneurship side once before, no, 3 times before, and one time we were successful. We just went through the 1-minute pitches, and it was sort of overwhelming, and I am still having like a lot of questions. We haven't even talked any of what it's going to look like with different structures of the deals, right? This is still just finding the companies to you know, there was 100-something applicants, and we're trying to cut it down to, I think, 32 or some small number.
24.
Yeah, and so far I have found that this part is sort of overwhelming. I guess my question right now is, what can someone on the investor side do to watch this stuff early? You know, I feel like there's not even enough time to get more than just feelings about some of these things.
In fact, I would say that from an angel investor point of view, when you have all of these companies out in the world saying they're doing things, you end up having to build a triage engine that says, this is interesting, I should follow up, and these aren't interesting, and put that to the side. And the numbers that I typically say is, we'll pay attention at some little level to 1,000 companies, of which 100 we lean into, of which 10 we invest in, of which 1 produces outsized returns, right? That's sort of the classic answer, which means that you have 990 companies that the answer was no, and 900 of them were, I didn't get the right feeling. And so you're correct. In the beginning, it's very light touch and sorting based on feeling, and not a lot else, because you don't have the ability to validate a lot of things else, which then for the startup then is a good lesson that you have to manage the investors' feeling about you. They have to have a reason to believe in the team. They need to have a reason to believe in the mission of the team. They have to have some level of confidence on your ability to deliver on the program. And so that's part of the process. We're trading both on the investor side and the startup side.
If I may, I think it's a very good conversation to have, David, where it's so overwhelming. It's like the water hose, right? It's a total like stream coming your way. And I personally like it, but I also have now learned kind of to make relatively fast decisions, and I don't go deep. Like I resist going deep. I don't really go into the gas profile, look everything up, read every PowerPoint about everything early on. It's more like I look for specific things that I care about, and I try to stay curious about things that I might not expect. And then it's all about, do I want to see these guys again or not? And if I want to see them again, I vote up for that, and then they come back with more time. If you try to like be too scientific early on, it's really, really hard, because you can go so deep and it's just too much. Even when we do just 60, you guys are now doing over 100. It's a lot.
And maybe I think what may help you to kind of take shortcuts in your pitches and be convincing is to pay attention to the investors in the room. Like what matters for everyone, right? Like what's their thesis? And so basically doing a checkpoint, a checklist that you touched on everyone's interest or priority. Sometimes, there's no need to talk about the product if you know that an angel investor actually is very much more focused on the business aspect or on the team quality, or so knowing your audience, I think, is very important for any startup.
Very good. Thank you so much. And thank you so much, David, for bringing it up. I think it was very relevant. And then I see that we have more questions in the chat. Please still keep asking us questions about the investor program, and soon we'll be transitioning into startup side. But for now, the investor program, is it free or we have to pay for it? John, what would you say about the program fees?
But so we have 2 sets of fees. The investors are coming in with $1,000 program fee that lets us pay for the LOC and allows us to pay for the resources to put it on. And then the companies, we have a $100 fee, which helps us keep the bar owners and the poets and other people who are applying just because it's a source of money and have no plan for scale out of the conversation. In general, we're leaving the task of filtering what kind of company, like which sector and so forth, to the investors to do that sorting. But generally, if you are raising a round that is bigger than $1 million, then that's probably too old for us. That kind of place where our investors with their $100,000 to $200,000 are going to be successful in helping that company.
Very nice, thank you. And as we already mentioned, one more piece is that all the participating investors make an investment commitment of 5,000, and from that we don't take any fee percentage carry or anything. So that's the investment commitment of the program. I wonder do we have one more question? It can be anything about angel investing. Raise your hand or put it into the chat. And this is the last minute for doing that. Any hands going up? I don't see the full picture. Yeah, Samana and
Yes,
one
yeah,
there. Samana, please.
yeah. I hope you hear me. Yeah, I have a question about because I'm new in this group. Yeah, so I apologize. I arrived later. So I have some question about because I'm starting my business and my startup. So I'm trying to understand what's going to attending different meetings and to shape my future company. So my question is regard, do you think the program is also can help me to find the correct investors that can invest in my idea? Because I'm now in the phase to build the products and to shape my idea and to find the potential investors that can really uh, do some kind of funding, because my idea is not that cheap to build. Yeah, so we need to build it like so we need a dedicated development team, so that's why I need the funding. Yeah,
Yeah, sounds
so
very interesting, Samana. That sounds great. I think the program could be helpful. Uh, well, okay, this is a startup question. We are getting there, but the program can definitely be helpful.
So this is a important investor question if you
Right.
think about it the right way. So he's saying, I have a company, I have operational expenses that I want to cover. I can't afford it myself. And so I want to build the product. There's a problem with that. And the problem is, I'm really excited about my toy and I'm going to play in my garage, and I want you to pay me to play in my garage. And when you lead with that story, then the investors get particularly uncomfortable because it's not a business, it's a project. And so we want to see that you've done the business work. And the business work involves customer discovery, it involves the marketing stuff, the channel development, the financial modeling, and a whole bunch of stuff. In fact, I would say 80% of the business is not doing the product. And so I'm also a lean startup fanatic. So I believe that you should be doing a content strategy and you should be doing customer discovery before you start building anything in your product. And if you don't have customers who care about your problem, customer problem fit, you can't identify that, then there's no way for you to validate that the solution you have in mind is better than any of the other existing alternatives. So you don't even know what existing alternatives they're using because you haven't identified the group of people with the problem. And so there's a whole bunch of work there to happen. And as an investor, that would be a question I would want an investor to be asking. Why are you building this in your garage instead of solving a problem for real people? And tell me the real people that are in there, right? And so that would be useful. I think that for a startup, you should be practicing as much as you can telling your story in a meaningful way. Here's my story to investors. Here's my story to customers. Here's my story to other startups and what's going on, so that you build a perspective about your business and you tighten up all of the stuff that you have glued together in your mind with hope. And you need to drive all of the hope out of your business model and turn it into measured answers. Right. And so if you do your financial projection to model your company and you have a bunch of numbers inside there, there are these magic constants of there's 7 billion people in the world. And if I get 1% of them, then I make lots of money. And you crank that around until you get, I know that it costs me $35 to get this customer. And when I spend $35, I get one more customer. If I spend 350, I get 10 more customers. And that's predictable. And they stick around for at least a year. Now I know what my revenue is based on the amount of marketing money I have to put in. And all that becomes data instead of belief. And our job as investors is to try to understand what part of the story that people are telling me is belief and what part of the story that people are telling me is measured data. And then in that, for me to then triangulate on my belief that you as the founder can take that belief into data. And that's the fundamental question on all, 25, 30 different axes of what a startup could be. I need to have some sense of that, right? So Yes, you should come in because it'll give you practice. Yes, you should come in because it'll build relationships with people who are investors asking those kinds of questions. And you should get very clear on what parts of your story are hope and what parts of your story are data.
Thank you so much, John. I think that was a very full answer. I hope that gave you some clarity there. And I see in the chat you already mentioned, thank you. That sounds great. We'll take one more investor related question and move forward. And I already see that in the chat we have a question from Yara and Chiro Rockert.
Oh, I'm
Huh?
sorry. That was just a comment. Yeah, to what he was saying, finances plus timelines is very important to the investor. Thank you.
Got you. Okay, that's not the question then. We have one more question then from Julia Perideri, if I'm pronouncing it correctly, please.
Yes, hello. Oh, sorry, you don't see me. Perfect. I have a question on follow-on investment, actually. So what happens when the angel comes in, everything is going okay, but then, relationships tend to be rosy in the beginning, and then when the money runs out and there's no other investors coming in, then that relationship can get a little shaky. So I'm curious what the investor perspective would look like from that point of view.
So there in the United States, there are 3 levels of investor. There's accredited investor, which we've been talking about, that's allowed to angel invest. But then there's a thing called a qualified client, which is people with a net worth above 2.2 million, which are allowed to invest in a different way. And then there is a qualified purchaser, which is people above 5 million in net worth. I would argue that if I'm a super angel writing $25,000 or $50,000 checks, and I need to have a portfolio of 20 to 40 companies, my net worth needs to be significantly above $5 million, which represents about 2% of the US population right now. So if I am an investor who's below that, then I probably should be writing small checks, many small checks, and I should probably not be following on. So that's one kind of investor. If you want to follow on, I think that the best way for that kind of investor to follow on is to become a passive investor in a micro VC fund, where the micro VC fund is investing like 1 or 2 steps later. And you just take your company to that micro VC fund and let them evaluate it, rather than you trying to save your money in this company that's all hope and no data. And so the best way of doing follow-on investing for 85–90% of angel investors is to let the venture capitalists do the follow-on investing. In venture capital, they are operating on a fundamentally different heartbeat than the angels are. And one of the things that they're trying to do is to create specific kinds of companies. And you need to understand whether or not that's appropriate for you and your kind of company that you want to build. And often startups don't realize the narrowness of what a venture capitalist thinks is a good company. And so even when they invest in you, they may then discover, oh, you're not the kind of company we want. And even though you're doing a good job as a business, they stop supporting you. And that's not good for you, because it leaves you stranded in a place where you can't get to where you want to do. So I would encourage you to think carefully about what kinds of investors are appropriate for the scale of company you're building. I see Dan Braun asked a question in the chat.
Oh, John,
about,
can you quickly, oh, sorry to interrupt, but John, can you
Yeah.
quickly maybe talk about the final events and the participation of the VC community? Because I think that is covering the follow-on investment to some degree, where the...
Seattle Angel Conference and the Startup Investor Accelerator, to a lesser extent, because it's spread out a little bit more, wants to have all of the angel groups in our ecosystem and all the micro VCs in our ecosystem come to the final demo day. So we go through this sorting process from 60 companies, 24 to 12 to 6 finalists. We do the due diligence. Then we have a demo day where the companies present. And in that presentation, they should be in an audience that has people that might want to invest in them later. And in the Seattle context, we typically have on the order of 12 other groups that come to the final event. And then it's very often that more than half of the finalists end up getting some kind of engagement and get funded by one of the other groups within 3 to 6 months. And we're trying to build that same capacity in the Startup Investor Accelerator. One of our requests of you would be, where are the pre-seed angel groups and the pre-seed or seed investors in your community that might want to come to the demo day to see the finalists so that we can build that amplifier? The virtual angel network in the United States has been very active in terms of reviewing our companies and pulling them in, as well as the Puget Sound Venture Club, which is now part of Alliance of Angels in Seattle, has frequently taken 4 out of 6 of the companies in for review. So yeah, that would be a pattern that we would like to amplify.
Thank you so much, and thanks so much for the question, Julia. That was great. To sum up and to finalize the investor part and move forward, I'm sharing with you in the chat the investor program information link. Can you please kindly fill up that information, which is generally saying, I'm interested in learning about angel investing, if that's your case, so that we can get to know you more maybe, and also probably invite you to one of our programs or future events. So I just put the link in the chat. I'd appreciate it if you can fill it up. That helps. And now to the long.
I see that Dan Braun has a question. Does
Startup related question. Yes.
SAC ever lead or participate in syndicated rounds with other angel organizations? We are often co-investors with other angel groups. Often we are first into the company, and then the other angel groups, at least in the Seattle area, follow into the round after us. We have led rounds, and we have specifically had the lead investor take on the lead investor role for the whole round instead of just the angel conference part of it. But it's really up to the lead investor how they're going to engage with the company, and that's part of our goal, is to grow more lead investors. We have done angel list investments on the side, where one of our members has decided to put a syndicate together to their favorite company that didn't win. So that's another pathway. Yeah.
Perfect.
Yeah. Madrona does come into our programs. They tend to be much later than the other angel groups. But yes, we do have Series A venture groups that have seed funds often pay attention at some level. But again, that's something we're trying to expand a little bit more.
Perfect. Thank you so much, John, for the question. And I see another hand just went up, and I'm thinking that's probably a startup related question. Can you please confirm if it's startup related question, because we are just going there? Okay, the hand went down. Okay, perfect. So now let's address the topic from startup point of view, since many of you are here for that. The basic overview is that it's a pitch competition for investment where startups participate. And as you heard already, the process, if you were paying attention, you already know what investors are thinking and going through. So from the startup point of view, the whole experience feels like a competition, but it is competition, and it is made in a form of competition, but we do aim to deliver support, a lot of feedback, and a lot of meaningful conversations that are helpful for the startups. From startup point of view, the competition takes 3 rounds plus due diligence. The 3 rounds are divided into 3 stages of pitches. We start with 1-minute pitches where all the participants that apply. So if you apply to the program, you will directly be taken into the first 1-minute pitch. All the startups come and do the 1-minute pitch. Right after that, there's networking, and you get to know the investors and vice versa. The second stage, if you pass the first stage, then you are invited to do a 3-minute pitch, which is accompanied by Q&A and networking. There you have a lot more time. We dedicate 6 hours to those sessions. You get a lot of time to spend with the investors, get to know them, and they get to know you a little bit more. And the final pitch competition part goes into the 10 minutes pitch sessions where you as a startup are invited back to do a 10-minute pitch, Q&A, networking, and an individual angel investor comes for a coffee meeting with you, might be virtual coffee meeting. the ultimate goal of this is to identify and like connect and see if one of them can actually champion you and help you move forward into the program. After these 3 stages of pitch sessions, we go into due diligence mode, where a group of investors, generally 4 to 5 investors, join your startup team as the due diligence team of investors, and they spend a lot more time, or a little bit more time, actually getting to know you, getting to know your team, really understanding your startup from different angles, maybe if necessary, getting to meet some of your clients, looking at your finances, like really diving into the details, not only to like examine, I will call it, and analyze, but also hopefully to support and address some shadows that you might not have thought about, or you might have overlooked and not addressed everything, and help build the missing pieces. The goal there is not only to do the due diligence for the program point of view, so that we can see if we can invest or not, if there is a fit, but also to help prepare you so that in case you are going to raise funds with other networks or other investors, you'll have all the documentation, everything ready to, you know, succeed moving forward. So all of that due diligence ends with a mixer session where the startups, which are now the finalists, which are generally 5 or 6 startups, are invited to spend a whole session with the investors, you know, the final conversation, and everything is concluded through a due diligence day, demo day, where the startups do a final pitch, where not only our program investors are there, but also, as already mentioned, a lot of VCs, a lot of angel networks are invited to watch and hopefully co-invest with us or pick you and invest directly. The demo day is finalized with picking one final winner who gets all the investments from all participating angel investors. This is a ticket size between 100,000, generally minimum 100,000 and maximum 200,000. And other than the winner is the only one that gets announced right away. But other than the winner, some other startups might get investment dependent on the relationships they have built with the investors, and if there is a match generally with the group of investors and the startups or not. So this was a lot of information all at once. If you have never heard about us, it might be a bit. So let's try to address maybe a few more things together with Cyril, Sophia, and John, and open the floor for more questions. Sophia, I'm looking at you and I'm wondering what you're thinking, and what do you think is an important thing to inform the startups in advance to help them prepare and participate with their best?
Yeah, I think our program, it's a great opportunity to test out your assumptions. Even if you do not have an MVP, I mean, even if, you know, you probably don't even have a customer there, but you have to have a team, or you have to have some elements, right? So I know we haven't got into the details of it. I'm looking at the time that is going by, but I would have to say that, you know, for the startups, the entrance ticket, it's very like it's not as expensive, and you get a lot of value, I think, for what it's worth. So I think, John, correct me if I'm wrong, but I think it's around $100 for startups to get in the program. And then so you pay $100, you get a lot of feedback from angel investors and future angel investors, and you have a chance to win the big check of $100,000. So you get like 1,000 times the return of your investment if you're, you know, if you're winning it. And I think that's, a very good investment for a startup, better than any marketing campaign or whatever. The benefit is also that you get very diverse angel investors, right? Like coming from different fields. And so think about having a user group that is very broad, like coming from broad backgrounds, broad experience. So I think that's an amazing thing. Time-wise, like, yes, you need to spend time. So that's the investment that you have to put together with your money. But I think you would get tremendous value out of it. I see there's a hand up, so I'll stop here. Thank you.
Thank you. And I thank you for the question coming up from McLean, but let's hold it for a minute. I want to hear Cyril's thoughts on the same topic.
Yeah, I mean, practically speaking, we touched on the kind of the sheer amount of startups that are pitching to the investor community, right, in a very short amount of time. I have kind of two pieces of advice, I think, for the startups. I have more, but the two main pieces. The one is, imagine we on the investor side are listening between to 60 to 100 pitches in like 2 or 3 days. And we only have 1 minute with the startup. So like you have to deliver what you are doing, why this is like amazing, and why we on the investor side want to invite you back and learn more from you. Because that's basically what you do in the 1 minute. There are all sorts of 1 minute pitch examples on how to do it best. But from my perspective, I'm listening to the pitches, and I like to do that actually to all of them. But fundamentally, I take a lot of notes, but I want to be able to say that startup, they're doing this, and I like it because of that. And if I can say that, then I'm inviting them back. But if I can't say that, I'm like, I don't know what these guys are doing. Right? That happens to probably half of the startups. I want to be careful with how judgmental I am on that, but probably half of the startups, and it could be my fault that I don't understand, but I'm like, I don't know what this is, and I have no idea. And so I'm in most cases, I'm not voting to invite these back. And one of the very pragmatic pieces of advice here is that practice the 1 minute pitch. And if your 1 minute pitch is, you deliver that in 2 minutes, we will cut you off after one, and half of your pitch goes away. So we don't know what you are up to. And so you have to practice that. And the last one comment I want to make on the process, it's super important that you understand what the process looks like. Right? It's a minute. Okay, you do the minute. What is the goal of the minute? The goal of the minute is that you are voted into the next round. The 3 minute pitch, what's the goal of that? Getting voted into the next round. So your objective is not to win the check at the early on. Your objective is to get voted into the next round, so you can go through the process and then end up in one of our finalists. So you have to kind of keep that in mind when you're pitching as a startup.
Precisely. And I want to add two things in case you are thinking now, oh my God, how am I going to compete against so many startups? I want to bring up the fact that we take up to 60 startups. So actually the selection of startups participating is not that many. If you think about when you apply to a VC or an angel network, you're probably one of 900 to 1,000 that they are considering, versus here you're one out of 60, and everyone is brought into to meet the investors, and everyone has an equal chance. So actually it's quite an, how do I say, easier process, or like the chances of moving forward and actually get something out of it, it's quite possible and available. And the investors' attitude is also quite nice to provide feedback and actually be kind and support the startups in some way. And another thing I want to bring up is that in case you apply for the program right before it starts, we do hold a preparation session where you'll be invited to, practice your 1 minute pitch and, get ready to actual program. So in case that question is coming up, know that it's there is a support preparation 1 session scheduled. And I see John sitting there with thoughts in his hand. Do you want to say something before I start taking questions?
No, let's do the questions.
Sounds good. So we have the first one from Gwendolyn McKellen.
I apologize if you hear my dogs barking in the back, but it just can't be helped. I don't know if this question is appropriate at this juncture or not, but John made me start to think about something when he was talking about the diversity of rules that regulate investors across the world. Should we be leery of any investor that asks us to pay agent fees?
Yes.
Who said yes?
John did.
Oh, okay, I didn't know. Okay.
Don't do that unless you have very specific clarity on what they're going to do and why they're going to do it and how it's going to work. But for the most part, 99 point some number percent, those are not effective people. They do not help at least in the US context, they do not help you make the progress you need to do. You need to build the relationships with the angel groups. And it's not like the angel groups are hiding. For the most part, you can get to more than half of the angel groups just by engaging with the Angel Capital Association. And we run, you know, a Meet the Funders workshop twice a year, which is a great way to get connected to a lot of the early groups. So much better to find a champion of your efforts inside an angel group than it is for you to get an agent that's going to do it for a fee.
Okay, thank you very well. Wait one more moment though. The investor has said they will fund, but we need to pay an agent fee.
Nope.
Okay, that's all I want to clarify. No, I appreciate the opportunity to have had the experience here thus far. I've learned a lot. Thank you.
Thank you
Thanks.
so much for the question. Thank you. Next we have, and if you're a startup, please start raising your hand so we know the questions are coming. And Saman?
Yes, I have a question about is there already some kind of use cases that you that we can before the meeting that we can prepare ourselves to understand, for example, what was discussed and how to win, you know, because I think nobody wants to lose. I mean, the startup company, they want to win, and so just to prepare ourselves before the event. Is there already some cases you have or that I can read and study later? Thank you.
So I put into the chat where we put our recordings, and you can see some of our final events there from previous events. And if you just look at what the startups say there, a lot of things will come clear. And we also have workshops, and particularly the workshop on customer problem fit is one that I pound on hard often.
And also adding on top of that, as I mentioned, to all the applied startups, we will invite to one preparation session where we will help guide further how to navigate the program and how to proceed stage by stage. There is no prior recorded other type of materials to provide, but also if you sign up, you'll receive the sheet, a page of description about the program and what's expected. That might also help. Thank you for the question. I'll move forward to Terence Clark. Sorry for mispronouncing it potentially.
It's okay. Thank you for allowing me to even ask my question. I actually have a few questions, but I'm gonna try and narrow it down to at least two. So, and maybe you can clarify on some of the things because I may have missed some information. So with regards to the support that SAC offers through this program, right? You mentioned the one pitch presentation, which I did, and then you move on to the 3 minute, then move on and move on. My question is, if a startup does not move forward from the 1 minute onto the 3 minute, do they still get the support that's discussed, that's offered through this program? And if so, at what capacity? That was one question. The other question I had.
Right. Let's do one at a time.
Okay, one at a time.
So you get, the deeper you go in, the more support you get.
Right.
But really, this is a community building effort. And so the little magic secret is, if you build a relationship with one of the investors who loves what you're doing and is on board with your mission, and they then glue into what you're doing, you get long-term engagement from that person, even if they're not investing in the company. And so that kind of sociological connecting people with resources to other people so that they can make progress happens regularly. Sometimes it's like Sophia's doing, where she was the due diligence lead of the company that won, and she's continuing to help them. But sometimes it's the due diligence team on the finalists. Sometimes it's, you know, the guy didn't make it to the quarterfinals, but one of the investors fell in love with them and is helping them now 7 years later. Doesn't always happen.
Yeah, exactly. Right.
Yeah.
Right.
But that's your job, right? Your job as a founder is to build relationships with people that are on board with your mission and like you.
Absolutely. The buy-in.
Yep.
That's what I'm so focused on. So thank you for that. The other question I had is, it's actually in regards to specifically pitch presentations and your positioning to pitch. This is my third experience of doing a pitch presentation. The first time I pitched a presentation, my pitch was the last pitch just before lunch. The second time that I did pitch presentation was this 1-minute pitch. I was 112 out of the 114 people that pitched. My question is, talk about the value of positioning as it relates to, pitching your presentation. In other words, does it have a negative effect on a company that's pitching if they're pitching close to a transition time in the pitch format? Did I explain my question correctly?
Sure. There's all kinds of little logistical questions that changes the amount of attention that you're getting. And so the first answer is you have to be remarkable. And if you are not remarkable, then out of the 100, you're not one of the 3 they remember. Secondly, you have to be compelling. They might remember you, but they might not care that they remember you. So if you're not compelling to get them lead in, that doesn't help. Being the first and being the last are very powerful places, which is why we randomize it, right? Is to have nobody prepared for their position. And so that's part of the thing. But the secret is chemistry happens at the surface area. So the more surface area you create, the more chances you have to be remarkable and compelling. And so you want to do as many of the different places where you run into people as you can so that you can find the chemistry. And then once you've identified the chemistry, to double down on that chemistry.
John, you're awesome, man. You're a wealth of knowledge. I got one more question if I can. So with regards to my previous experience with pitch presentations and potentially having conversations with investors, some of the feedback I get is I'm too early or it's too soon. But then my follow-up is, okay, thank you for providing me that. What does it look like for me not to be too early or for me not to be too soon? So then they'll present to me that information to which I think I'm addressing, but then I'm still caught in that too early, too soon.
Well, different investors invest for different reasons. And so all they're telling you is that you're not at the right stage for what they filter for. And so going to a Series A investor and telling them a pre-seed story, that's not really useful, right?
Exactly. Right.
So the earlier you go, the more that it is a question of faith capital. So there's faith capital, risk capital, and financial capital. And so people believe in your team, they believe in your execution ability, they believe in your mission from God. And there's a thing there that is a emotional relationship about the faith that this should happen in the world. And the more that you get to Series A, your numbers have to work, you have to have all of the revenue working, everything has to be going. Most angel investors are in the middle. They're doing risk calculations about, from what I know, what can I expect, right? And they're doing a combination of risk evaluation. If you're really too early, you're looking for faith investors that are believers in the mission or believers in you. And then the more and more you build traction, momentum, effectiveness of execution, the more you have evidence, the more that angel investors will say that you are appropriate for them. But you have to remove the hope from your environment and turn it into data. And if you're not doing that, systematically removing belief and turning it into knowledge, then you will remain too early.
Absolutely. Empirical evidence is key. I totally, you selling it, I'm buying it, right? So that's part of my, addressing that too early or too soon, so it's a complete learning curve. That's an understatement, to be somebody who want to complete a program. And I know I thought I saw somebody try to interrupt. So thank you, John. Appreciate that.
Thank you so much. Thank you for the questions. I have one more hand up. I want to address it before we are out of time. Adrian Dumont.
Hi, my name is Adrian. Hopefully you can hear me okay. My name is Adrian. I started BrainCloud, and I've worked in engineering for like 20 years, and I decided to start the company to try to solve a problem, which is there are a lot of cloud services out there, but not a lot of good menus, and sales teams struggle to sell these products. So I thought I'd ask a similar question to Terrence, and then I think Terrence got a really good answer from John, so I appreciate that, which was, what does it look like for an ideal company to win this competition? Does it, we already had a successful sale to a company here in San Diego for 5K to buy our tech swag. Kind of looks like posters and books that we published and mouse pads and things like that. So this is, I guess, a follow on to that question. Could you describe the ideal company you'd like to invest in, and like maybe like thank you for your answers in advance?
So the real answer is no, I can't, because what we're doing is trying to elicit from each of the investors what their investment thesis is. And so each group, because they're new people, has a different investment thesis. So I suggest that Cyril has a different investment thesis than Sophia. And so which one are you trying to go to? Well, we're looking at the gestalt answer of all of the investors sort of deciding in the middle, right? And so what are 3 things that you care about, Sophia, in an investment? What would make Adrian a great investment for you?
The team to start with, like a team that is very confident and that has a healthy collaboration method or path. And so that's for me is critical. And then the other thing would be to have a product that solves a real problem. So something that really answers customers' needs, with a very tangible added value, or something that definitely shows that it improves the life of the customers they target. And then the third thing, it's critical to have a scaling strategy. I've been working for over 4 years on scaling strategies at Microsoft for their digital identity product. And I think without scaling, it's kind of hard to reach to a critical amount of customers that could actually start to speak about your product, and so that you in the long run have less costs on marketing, or ideally no marketing, just have a good product that can scale very easily.
Thank
Cyril,
you.
you have anything different you would add to that puzzle?
Yeah, I mean, obviously the spaces are kind of similar what we're all looking at, but if you go a little bit deeper, I look into kind of founder problem fit. Like, are you the person who is understanding the problem that you are trying to solve? Or is your team, right? We have we didn't touch base on that, but we typically tend to only invest into startups that have a co-founder or a founding team. We prefer not to have single founders. That's a whole other conversation, but as a general guideline, I think that's important to recognize. Then secondly, I look into, is the problem big enough, right? It's the market size big enough that you're trying to solve? Is that large enough? I don't need a lot of evidence for that initially in the early pitches, but I want to kind of understand, are you solving like for a real market or not? And then lastly, I need to get some evidence from, like, what is the signal that you have from your target customers? Like, is it working or is it not working, or how much is it working or how much is it not working? Like, bring evidence, because we are talking about pre-seed startups here. In my expectation, I'm not looking for that you already have 1,000 customers and some revenue coming in and all of that. Then you wouldn't speak with us, right? You're coming to us because you're super early. So for super early, it means brings the signal you have to the conversation, that you can say, here's who I am, here's the problem I'm going to solve with that type of solution, and here's what I've learned. And that's the signal you need to bring. And lastly, I think the learning, it's a little bit meta, but fundamentally you can look at startups as a complete learning experience. You need to learn your way into that space and into that market. And if you find something that doesn't work, you need to pivot and learn something new, but you need to kind of keep learning, because you don't know, right? You're entering a new space. It's all like nobody has been there before. And especially, I mean, you haven't been there before. So you have to kind of keep doing that and then be able to learn, right? We also tend to like founders that listen to feedback and then adjust if needed. A bunch of other stuff, but that's a longer conversation.
Thank you.
Thank you so much for the question. And before moving to the next question, I want to mention that if you're a startup and you want to apply, the link is already in the chat. You can find it there. Please apply, and also know that it's more important at this stage to apply and hold your space in the competition than turning in a perfect application. After applying all throughout the competition, you can every day, anytime you want, go and update your application, add things, remove things, add your new data, new customer information, everything. But it's very important to get in, since we take only 60 startups. The way to know if the application has closed or it's full or not is, for as long as the button is available for you to apply, if you apply, you're in. Whenever it's closed, we remove the button so you cannot apply anymore. So for as long as you see the blue button of apply, you're welcome in. I'll go for the next question. We had some, Dan Brown. How can we help?
Wanted to see if you could speak a little more to the team as a solo first-time founder. In all my education experience, it's all about the team. So we're in a pre-seed stage. Part of our milestones are forming a board of advisors, that kind of thing. But can you talk about maybe strategies I can use as a solo founder?
I'm gonna break the ice there. I don't know.
Sorry, go for it,
Yeah.
Sophie.
Yeah, it's interesting. We have seen these discussions going on and off, and there's pros and cons, right? Like as John said, it's all about like how do you deal with what you've got, and being a solo founder, I think it means that you take more risks on your own, because first of all, it means that you have to put 100%, of the capital in the company, and whether that's financial capital or time capital, or so you are taking more of the risk on your own, right? And so that you have to acknowledge that will at some point, like you'd have to take and the glory and the failure, like it's just a lot of responsibility. But that risk that you take on your own, it actually translates into more risk for the investors. So from an investor perspective, it's if you are competing with another company that already has a team, so they have more of a resilience, then you might show up at less competitive, right? Because in case something happens to you, then the company is no longer like, it's a huge risk for an investor. So I look at it from the angel investor perspective. And the next level sometimes is, we see a founder that maybe is joining with their spouse as a family. Also, that's another type of risk, right? So the dynamic in the team matters. And some people may say that there are pros and cons, but yeah, the more resilient your team is, the more reassuring you will show up to your angel investors. That's my answer.
Great, thank you.
I mean, I would turn the question around back to you, Dan. Kind of, why are you a single founder, and why didn't what's your situation? Why is there no founding team, and like how are you thinking about it? And before you answer that, if you have time, I also want to raise another kind of future point where it's not just us saying you should have a co-founder. Like there are many VCs out there that have a hard rule that they're not investing if you don't have a co-founder. And it's very difficult to do that later. Like the earlier you are to add somebody else or like creating a team into your startup, that is, while it's difficult, I totally recognize that, it's easier than if you do that down the road. Eventually, this will become much, much more complicated.
Gotcha. And it all came to be because the business idea was in my brain. So for several years, it's just been Dan Braun and a business plan. And I realized, yeah, I'm wearing all of the hats, all the marketing, the finance, everything. I'm fine with that. So I just wanted to get an idea. Now, let me pose this one quick follow-up question. Can the team be early hires? In other words, if I can get the business up through seed funding, will folks consider the early hires as the team, or is it strictly founding team members?
So the nuance that you are dancing around is founders have a different responsibility to the company than the employees. And when I am an employee, often employees draw a little imaginary box around themselves and say, I am a whatever, and they live inside their box. And when the company's doing weird stuff, then they complain about all of that crap outside their box, but it's not their box. But when you're the founder, the box is the company. And when shit hits the fan, you're the one that gets to fix it. So we're running out of cash. Where's the first place you take money out of your expenses? Probably that is the any money going to any of the founders. So all of the founding team doesn't get a salary while the employees get salaries. Why is that? Well, because the founders are responsible. They have shares in the company. Their payoff is the company survives, not that they're getting a salary, right? So I had that exact thing happen. My co-founders were in place. We hit some funding shortfall, had to cut 100,000 out of the budget in the next quarter. Whatever money we were paying the co-founders, that's gone. At that point, those people that were not committed left, which was the right answer, because if you're not committed to the result of the business, you shouldn't be in the business as a startup, right? And so that level of commitment doesn't happen with employees, no matter how good the employee is.
Gotcha. Thank you.
Thank you so much for
when you have your little visit with the beer truck or whatever the particular accident is, and you are not functional for 5 weeks, who will take your business and make it survive? That's your co-founder. And if you don't have one of those, or better yet, 2 of those, then you are putting yourself and your business at risk.
Perfect. Thank you so much, John, for the response, and thank you for the question, Dan. We really have to finish it up, and I see that we have one more question. Is it a 1 minute, very quick question, or should we leave it for next session?
Yeah, no, I'm gonna be real quick. I guarantee you, because I don't want the dogs to bark. I just need to respond to what Cyril and John said. I appreciate everything that you guys are saying, but I have to be sympathetic to the young man that brought up the situation only by saying, people have said to me when I talk to them about getting involved in the business and stuff, well, what do we need you for? We don't need you. You got the idea. What do we need you for? We could go on and do it ourselves. So you get caught in that catch-22 situation when you're talking about bringing people in. Now, fortunately, my structure is set up on the nonprofit, and I'm going to have to move over eventually. But on the nonprofit in the United States, you have to have 3 people, and my family members were willing to come in. But you do get caught in that. I just had that a month ago when
But if you build a team that doesn't have commitment to you and your efforts, they're the wrong team, right? And if you're hiring people that have that same thing and they don't have a commitment to you, they're the wrong people to bring onto the team, which is in fact the number one risk.
I've got about 20 freelancers who worked for me for almost 2 years and who've been nothing but loyal to me and who have not taken advantage of me and just been there. And all I've been doing, sometimes I can't even afford to pay them. I couldn't afford to pay, well, let me not get into my sympathy story, but just the project that I put together, she did it for me for barely nothing so she could help me get into this kind.
That's amazing. And I think it's a very inspirational story. And thank you so much for sharing. And it's also encouraging for the folks that have just started one founder teams. Thanks for sharing that experience and an example. I think that's great to hear. And congratulations to you for having a great team there. Unfortunately, because of time constraints, we are going to end the session around here. I want to say thank you so much for joining. You were amazing. You're an amazing audience, amazing participants. Thanks for the questions. And I want to specifically thank Sophia, Christina for all her efforts in bringing TAG5 together and planning to be the lead investor in the upcoming program. And for Cyril for all the activities he's doing and helping the program succeed. And thank you, John, for your time here. I want to highlight that the program is starting on March 14. Both as a startup and as an investor, you still have time to join us. So please be proactive, reach out, fill in the forms, and we'll be in touch with you. If further questions come up, you can reach out to any of us, either one of us, and we'll try to be of help. That's all for me for now. John, Sophia, Cyril, do you have any final remarks?
Just quick, if you're in Switzerland, reach out to me. If you're in, I don't want to be too picky. I also take the Germans and the Austrian and the French. So and Italy, if you're in Central Europe, please reach out and we will figure out what we can do together.
Exactly. And thank you so much, everyone, for being here. That's it for today. Thanks for joining. Have a great day or great evening ahead.
Thank
Bye.
you. Thank you,
Bye-bye.
everyone, for joining.
Bye-bye. Thank you.
Bye-bye.
Thank you. Bye-bye.
Thank
you.
you.
Bye-bye.
Thank you.